To have such a great panel and a diverse panel. I'm just going to mention quickly, we have Rob Goodall on the far end of the panel. He's the founder and CEO of Atrium Mortgage Investment Corp, which is a $650 million national non-bank lender that trades on the TSX, so a public MIC. One of the things I wanted to just start with, just to get a feel for the audience, how many people in the audience have are invested in mortgages at the moment? So, you know, I expected to see that. I think most people realize that mortgages fit a nice role in a portfolio in terms of capital preservation and yield. But what we want to try to understand today with the panel is some of the differences, the different types of mortgage lending, the different types of investments you can make with different mortgage groups. So, you know, when I first started talking to these guys, I wasn't 100% clear on the differences between private MIC, public MIC, and non-MIC. And so it's great that we have those three perspectives today. And I think maybe we'll start with asking Rob to tell us a little bit about public MICs and the pros and cons, and you could touch on Atrium and your background as well.
Okay, thank you. We've been actually both a private MIC and a public MIC. We've been around for 18 years, which makes us one of the older MICs out there. And at over 700 million of mortgages, would be one of the top 2 or 3 players in the market. We went public in 2012, and I really went public for a few reasons. Number one is in 2008, 2009, we had 25% redemptions, even though we lost not a penny. In fact, we did really well during that period. I still remember our dividend yield to our investors was 9 3/8 in 2009, and we experienced no losses. That almost served to make us ripe for redemptions, and it makes it very hard to run your business when you have 25% redemptions. So one of the reasons for going public was to have permanent capital. I was quite jealous of the one MIC that was publicly traded during that period of time, because they could actually use their capital to talk to the strongest developers, strongest real estate investors literally in the country, because there was so much trouble amongst the banks, and the banks became very shy. Where they would lend 75 to 100 million to a single client, they were down to 25 million at that point. So redemptions was a big reason, avoiding redemptions was a big reason for going public. Upgrading the management team, I felt would be very important as we grew, and I felt it would be easier to lure away a high-quality lender, institutional lender most likely, by having a public vehicle, giving the sense of more permanence to the company, and the notion that if I was suddenly hit by a truck, the company would continue on. And then the last reason was we had 5 to 7 shareholders that represented about 50% of our capital, and I worried that, including a mutual fund that owned 20% of our company. And I worried that one day some or all of them would want their money back, and I'd go through a redemption issue again with them. So those were 3 of the key reasons why we went public. There's only 3 of us that are public, Firm Capital, Timber Creek, and us. And it's worked out well for all 3 of us, I would say, at this point.
That's really interesting to hear that your perspective for going public was because of redemptions, where it sounds like to me, being public, you're giving the investors liquidity. That's one of the big reasons why someone would go into the public MIC instead of the private MIC. So you're giving them freedom to have redemption whenever they want.
Yeah, the truth is 2 of the very largest MICs in 08, 09 actually froze redemptions, because virtually everybody was private at that point. We chose not to, and I thought we'd be rewarded for it, and the truth is it was quickly forgotten.
Yeah. So it's just interesting. Your perspective was to not have liquidity in the book, but then you gave liquidity to all the investors and let the market deal with it instead of you having to deal with it, which is fascinating.